right, so welcome to today's exclusive webinar, Trading Through Inflation, Political Events, Geopolitical Flare-Ups, and Earnings Blow-Ups. My name is John Madison. I'm your host today on behalf of FFR Trading. And today you're going to learn how to navigate some of the most unpredictable market forces with a powerful combination of technical analysis, dark pool data, and news-based momentum trading, all through the lens of our featured expert, Mr. Ian Cooper. Before we get too far, though, let me pull up the risk disclosure. Take a moment to review this. Trading stocks, options, futures involves substantial risk. Past performance is not indicative of future results. And always consult with a financial advisor, and never trade with money that you can't afford to lose. I think you guys all get that. If you don't know who we are here at FFR Trading, we've been working with verified traders since 2006 to help individual investors and traders access real rules-based trading strategies. So we do the vetting, you get the edge. And we've partnered with Ian Cooper since 2018, and we're proud to support several of his programs, including the ones you're about to see today, Algo AI and the News Event Trade Alerts program. So our featured presenter today is someone many of you already know, Ian Cooper. Ian has helped traders grow and protect their wealth since 1999. He's predicted major events like the 2008 financial crisis, the collapse of Lehman Brothers, and even gold's rise from under $600 to where it is today. He combines fundamental analysis, technical indicators, and news momentum into systematic approach to trading high volatility opportunities. And he's now going to show you how to do it too. So Ian, if you can, just go ahead and test your mic.
I'm here, thank you.
Perfect. And where are you coming from today?
I am in Baltimore, Maryland.
And what is the weather there like in Baltimore? Here in Orlando, we got a lot of rain.
It's been okay. There's been a lot of rain here. We had a torrential downpour here yesterday when when rush hour was happening, which makes life a bit fun.
So it looks like we got the weather you had yesterday here. So I'm going to go ahead and switch over to Ian here, and Ian's going to get started with his presentation. When we come back, when Ian's done, we'll do a Q&A. So have your questions ready, and then we'll get into the programs, the performance results, and all that good stuff. So Ian, I've switched over to you.
Okay, one moment. Okay, let me just get to where you are.
Yeah.
Okay, all right, I'll take it over from here. Thank you.
All right, go ahead.
Now, I'm Ian Cooper. I've been trading options and stocks and ETFs and things such as that since late 1999, and we've had significant success. We've also had our good share of losers along the way. Everybody does, it happens, but you need to know how to manage your money along the way and have good money management tools at your disposal. Stop losses, trailing stop losses, things such as that we also like to introduce in all of the programs that I do run. Today, I want to show you how we can navigate the news and sometimes trade ahead of the herd mentality, and how we can trade the dissemination and the eventual death of news as well. Some of those news events include inflation surprises, political shakeups, geopolitical flare-ups, as we've seen with Russia and Ukraine, and most recently with Israel and Iran, and later on the United States. We can even trade earnings blowouts by waiting for the blowout impact to run its course. And I'll show you that in just a moment. Global news has been concerning for retail investors. We have the trade wars, the nuclear concerns, especially with Iran and Israel and the US. We have the on-again, off-again ceasefire agreements, inflation, political indifferences, and so much more that really greatly impacts all of our lives and the stock markets along the way. Now, one way to trade geopolitical flare-ups is just to simply pay very close attention to meetings and things that are taking place every day around the world. We have the Middle East war in Gaza. Tensions remain high between Israel and Iran. The Ukraine and Russia war continues to be a major concern, and the list goes on and on. And one way to trade a lot of these issues, especially, before Israel had, attacked Iran and the U.S. got involved, is all we had to do was focus on oil predictability by focusing on what was happening and being generated in the press. Now, before Israel even struck Iran, we anticipated that oil and related stocks would surge on the potential for a broader war in the Middle East and the potential for closure of the Strait of Hormuz, where 20% of global oil is shipped through. Now, we anticipated that around June the 4th. That was around the time when Iran rejected the U.S. nuclear deal, which resulted in oil prices starting to gush higher from about 63.5 a barrel. At the time, once they said we aren't going to come to an agreement with that, with Iran and the U.S. and Israel, we anticipated a simple war of words and not a real escalation of any type of war, which we did get. So on that potential war of words, we jumped in the oil stocks like ExxonMobil and Chevron. And as you can see on the screen right now, oil exploded higher and higher until Iran and Israel went at it, and it really spiked oil to 78 a barrel, which sent oil prices higher, which sent ExxonMobil higher, which sent Chevron higher. So all we had to do was trade the anticipation of war of words on Iran's rejection of the U.S. nuclear deal, and we wound up being able to make even more money when Israel had enough and decided to attack Iran. Now, shortly after that, we were expecting for that war to last a bit longer than it did. So, as you can also see on the screen right now, oil all of a sudden fell off the map. Well, that's because cooler heads prevailed, and the war did not last very long at all. So we took any gains that we could from ExxonMobil and Chevron and walked away. Unfortunately, not predicting that the war would be over as quickly as it was, we did miss the short side of ExxonMobil and Chevron because we, again, were not anticipating the war to end that quickly. But with most flare-ups in the Middle East, and especially over threats of closure of the Strait of Hormuz, oil is always a solid bet. I hope that makes sense. If you have any questions on that, please, jot that down, and I'm more than happy to discuss it a bit more as we move on here. We can also talk about earnings blowouts. Now, several companies have reported great earnings and even disappointing earnings, and there's a way to trade that as well. We can look at Target, for example. In late May, the retailer missed earnings and cut guidance. Shortly after, with a good deal of negativity priced into the stock, the pullback became overkill. So we were able to bet on a potential dead cat bounce and waited. In this circumstance, we were able to trade the death of news because eventually all news fades out and dies. But what helped us with Target to spot an entry price opportunity was we were looking for severe overextensions on Target of severely oversold markers on RSI, MACD, and Williams percentage range. At the time that Target plummeted to as low as it did, RSI, MACD, Williams percentage range all said you have a buy opportunity here because we're so deeply stuck in an extreme oversold situation. So we took advantage of that, and we took advantage of the fact that a good deal of negativity was priced into the stock. We bought in, and we did very well with it. Again, all you have to do is pay very close attention to news flow and to over and under reactions to news flow along the way as well to spot opportunity. But it's just not the news that we're using to before we jump into a trade, we're also paying very close attention to what technical analysis is telling us as well. Again, RSI, MACD, Williams percentage range. We can even throw in there money flow, or MFI, Bollinger Band set at 2 standard deviations above and below the 20-day moving average, full and fast stochastics as well. And when they all agree in overbought or oversold territory, that's when the opportunity begins to arise. Plus, crises often lead to opportunity as well. We look at AMD, for example. AMD plummeted not only in trade war concerns, but because of slowdown concerns as well. But as you can see on the screen right now, it was just a massive overreaction. It made the reaction, the pullback, made absolutely no sense to us, because the artificial intelligence boom was still just getting underway, and demand for AMD chips was explosive. And I'm sure, as many of you are now seeing today, if you're watching the market, AMD opened up about $13 a share higher because President Trump lifted the AI chip ban to China this morning. Another one that ran higher with AMD was Nvidia as well. Now with AMD, what's nice about AMD is after this massive pullback, we began to trade the long side of AMD over and over and over again in many of our programs, because the stock was just continuing to trend higher and higher on market strength. So as long as it was going to trend higher, we were going to continue trading it over and over again. And we did very well this morning in many of our programs. We took double and triple digit returns on AMD calls with expirations of this Friday and heading out into August. And we're probably going to look to buy even more call options on AMD, perhaps after a very slight pullback in the name on healthy profit taking. We may look to go out to September and October, because longer term, we do expect to see AMD closer to 200 a share, which is being forecast by a lot of the investment firms on the market as well. Now, overall, when we trade the news, and I just covered some of this over the last few minutes, we can trade the anticipation of news, the dissemination of news, which kind of creates a ripple effect for news, and the eventual death of news. Now, death of news is probably one of the best events to use when news flow happens. That's because eventually news, it doesn't matter what the situation, it will fade off and die. And as news fades off and dies, so do the stocks associated with it. And I'll show you that in just a moment as well. Now, for many, many years, a lot of investors and traders said you can't trade the news because it's immediately priced in, yada, yada, yada. It's not true at all. That was the efficient market theory that told us that when news is released, it is immediately priced in the stocks. But that's no longer true. We have hundreds of sources of information at our fingertips every day, thanks to online news generation as well. So if you have an intended reach of 100 people and only 30% of them get the news that morning, another 70% will see that news later on in the day and perhaps act on it later on in the day or by the next day. So you can always, there's always a way to trade the news. It is not immediately priced into any stock or any ETF out there. That's been disproven time and time again over the years. Now, when it comes to anticipation of news, you want to think of news such as a snowball. So you're standing at the top of a hill with a small snowball, right? Now you begin to roll that snowball down the hill. And as you do, that snowball becomes bigger and bigger, and it begins to build momentum. And that very same thing happens with stocks. If we can spot a potential story ahead of the herd mentality, we can take a position and simply wait. We can get a jump start with our snowball. And then as investors and traders begin to wake up to the opportunity that we spotted weeks prior, sometimes, our snowball gets bigger and bigger and picks up momentum. Now, typically we can do that with biotech stocks facing an FDA decision, a phase 3 trial data release, a PDUFA date, or even an advisory panel committee date a couple of months out. And we can typically see that by looking to see if the herd has reacted to any of this information yet. And if we can act before any of this information is out, we're trading the anticipation, and we can do very well with that. We also did with this most recently with oil stocks, as people began to wake up to what was happening in the Middle East with Israel and Iran. Oil just continued to gush higher and higher as the events played out, and that allowed us to successfully trade alongside of ExxonMobil and Chevron as well. Oops. We can trade the dissemination of news. The dissemination of news, again, millions of us receive our news at different times of the day. News can go from local to regional to national to global in some cases. And until the wave dies off, the impact on stocks can be long lasting and not immediately priced in. What's really neat about this dissemination of news that we can trade on is the ripple effect. If you throw a stone into a pond, it ripples out, and it ripples out and ripples out some more until eventually the ripple dies off. Same thing happens with news dissemination. We did that with AMD, for example, with recent insider buying in AMD and recent bullishness from CEO Lisa Su. And even this morning's news that President Trump lifted AI tech sales to China. Oops. And then eventually we have the death of news. Again, the ripple effect dies off. And as it does, so do stocks associated with it. Years ago, unfortunately, many of us remember the big COVID fiasco that hit the global community. Well, as that was unfolding for months on end, many of us were searching for, well, not many of us, the governments around the world were searching for a vaccine to help treat COVID and to prevent all the deaths that were happening. So you had stocks like Moderna, BioNTech, Pfizer. They were all exploding higher. As you can see here, Moderna, for example, exploded from about 25 a share to more than $100 a share just months later on the COVID scare. And eventually, when that news of COVID died off, when life returned as normal, when we were finally able to go back outside, the story of COVID, at least the severity of it, died off. It faded and died. The ripple effect faded and died. And as it did, so did shares of Moderna. And we see this happening every single day that we're of trading. We see death of news. All we have to do is spot the over and severe underreactions that we see on the markets, which is very often very easy to do. For example, one of the things that we do is we'll pull up Yahoo Finance most active, and we'll see which stocks exploded the highest, and then we'll dig into why it exploded the highest as it did, and we'll look for opportunity there and on whatever the news flow was, and we'll also pay very close attention to what that stock in particular is doing technically. What also allows us to jump in to news flow either on anticipation or dissemination or the death of news is our ability to trade dark pools. Now, with dark pools, large institutions are keeping their options trading hidden from the general public. That way, they're executed anonymously, and it prevents retail investors like you and I from seeing what they're doing and following them in and either positively or negatively impacting the stock in question that they're buying a call or a put on. But we can spot exactly what they're buying. We don't know which firms are aggressively buying or selling, but we can see the volume that's out there, which makes our trading day even more easier because if they're buying, let's say, $1 million worth of AMD calls, well, maybe we should look into why they're doing that. Because if they're willing to spend that kind of money on calls on AMD, there has to be a reason why. They're not just going to throw the money at the wall and see what sticks. Now, with Algo AI, we're using a combination of technical pivot points here as well. RSI, Williams percentage range, full and fast stochastics, Bollinger Bands at 220, money flow. We're looking for agreement in severe oversold or overbought situations as well. And again, dark pools are hidden options trades from institutions which are referred to as dark pool trading. For example, here's an example of what I'll look at every day. Throughout the day, you can see that what institutions were jumping into as far as calls or puts, and you can see they were spending hundreds of thousands of dollars here. And typically, we like to screen for transactions that were at least above $500,000. Under that, those are good as well, but we like to set up parameters at transactions above 500,000, or we'll look at for transactions that are above $1 million, because those are considered golden sweeps, for example. So they'll tell us that, hey, you may want to really dig into this opportunity because someone is spending millions of dollars on this particular call or put option. So you have the time of the day when a transaction happened, the ticker symbol, the expiration date, the strike price if it was a call or a put. You have your last traded price there, the details of it, how many calls or how many puts were picked up at a certain price, and then the value of that transaction. And some of those here you can see were above $1 million, which again are considered golden sweeps. And using dark pools, we were able to spot opportunity early on, around the time that Nvidia, for example, started to bounce higher. Not only were we triggered with Nvidia using our technical pivot points, again, RSI, MACD, Williams, money flow, full and fast stochastics, you name it. Institutional dark pool trading also told us to pay very close attention to Nvidia around the time that Nvidia was just beginning to pivot higher as well. And this is one of the dark pool sheets that we were looking at the time. So you can see there's significant call interest buying. And there were a few puts in there as well, but more than likely those were just hedged bets by institutions. And you can see those there. There were maybe 4 out of more than 24 other call options there. Most recently, and please wait until the end, we're going to issue 2 free trade recommendations that I think will pay off very, very nicely for you over the next few days or couple of weeks. Recent Algo AI trades that we closed, we just took AMD July 18, 2025, won 30 calls off the table for wins of 33% and 201%. That's because sometimes what we will do is exit a position in half. So let's say, for example, you bought 10 contracts. When we say exit half, you're exiting 5 contracts. We do that to secure wins and let the other half run a bit longer, usually with a trailing stop loss, a mental trailing stop loss. And then we took 174% wins on the 120 calls. Over in news event, we just closed out the Generac GNRC July 18, 2025, 130 calls for wins of 78% and 103%. Now, Generac may not be a stock that many of you may be familiar with, but it's a power generator company. And around hurricane season of every year, Generac sees significant buys for its generators, especially in areas that are usually prone to hurricanes. So that's another stock idea you may want to pay close attention to, especially during hurricane seasons. We also took half of the Palantir July 18, 2025, 142 calls off the table for a win of 43% as well. Palantir has been a very explosive AI opportunity that I strongly believe will head to higher highs until the AI story eventually fades off and dies. John, I'm going to turn it back to you.
All right, Ian, fantastic stuff. Guys, just imagine what these, what this would do to your, your IRA or, your trading accounts. I'm just going to switch back over here and we'll do a little Q&A. So guys, if you have questions, go ahead and post them now. And then we'll get into some of the more specifics of the program and the the Scott who's in the webinar. He said, "Thank you. I made a profit of $1,265 on your 2 trades on AMD today." So well done there. And I know we had was talking to one of the I was talking to one of our strategists here at FFR, and they reported that one of their clients was up 110% on that AMD. I think that was the July 18, the 144 call. So great stuff. So guys, if you have questions, go ahead and post them in the question box. Let's say Pablo wants to know, how do you pick your options?
Usually I like to trade in the money or deep in the money call or put options. And I'll start out by going at least 30 days ahead or at a max 60 days. Just because I'm typically trying to find quicker moving opportunities in there to get in and out of rather quickly. If I see a long-term opportunity out there, I may go out 6 months or maybe even buy a leaps trade, which allows me to go out at least at a maximum of 2 years.
Right, excellent. And Jose is asking, he says, so are you doing a spread? So maybe you should clarify, because you got 2 different programs here.
Yes.
So how about Algo AI? What are you trading there?
With both programs, we're using basic puts and calls just to make life easier for everyone. Maybe eventually down the road we'll add in some spreads for those that may have interest, but right now we like to just keep the simpler the better sometimes.
All right, and Lee wants to know, what is with the market at all-time highs, what's your outlook? It's pretty broad, so.
Well, yeah, no, it really depends on what's happening with the trade wars and geopolitical issues as well. What concerns me right now with the Dow Jones, for example, you can see we're starting to pull back here. We are at triple top resistance dating back to late last year. So I'm waiting to see, can we break above that point, or are we going to finally break down and see a significant, very healthy pullback that we are overdue for? But again, a lot of that really depends on what's happening with the trade war issues, geopolitical issues, inflation. And one of the heavyweight issues is what is the Federal Reserve going to do with interest rates, especially with CPI and PPI numbers coming out and jobs data coming out.
And Matt wants to know, I'm new to options. Oh, you cut out there just a bit.
Yeah.
Okay, I apologize, guys. Looks like the audio had just cut out a bit here. So Matt was asking, he said, I'm new to options. Will this program work for me?
Absolutely. The program works for everyone that's just starting out to those with years and years of experience. If you ever have a question about options or need more information about how options work, I'm always happy to provide any information that I can, or even speak with you directly.
All right, Scott wants to know, let me just open this up a little bit. He said, if stocks begin to pull back and we see pullbacks, what would be the best program for, let me just open this up, for puts you have?
Really, both of them, but I think the standout more would be Algo AI, just because the institutions would kind of, you know, tip us off using the information that we have if they were to buy, millions of dollars worth of particular put options. I also like, news event, because news can dictate if the market's going to capsize or with individual stocks.
And guys, think about the impact of having access to information that the institutions have. When Ian talks about these dark pools, he's giving you that edge, right? So it's an amazing edge when they're piling into, like you saw in Nvidia, for instance, all that money piling in through calls or puts. It shows up on that, on that radar. So it's an impressive thing to have, and I'm really thankful that Ian has, learned and put his experience into utilizing that data. That's been a huge boon to our clients here at FFR Trading for sure. All right, so let's get into Ian. Let's get into the particulars of the programs here. So
Sure.
folks can see what we're talking about. So let's start with Algo AI. Some of the academic details, we talked about the dark pools, you went through that. It shows up, these big moves show up on that big bank radar that you have through those dark pools. You're dealing with fear and greed. You combine it with your technical analysis, the technical pivots you talked about. Averages, this is for Algo AI, 3 to 6 trades per month. And again, I imagine that, depends on what's going on in the market, correct?
Yes, we typically we want to issue 3 to 6 trades a week, but markets lately have just been excessively volatile.
Absolutely. And the indicators that you talked about, the technical side of it, the RSI, the MACD, Williams percentage, Bollinger Bands, stochastics, right? And Ian provides you with all that data as part of the program, as you'll see here. But let's take a look at the performance summary here for the Algo AI Trader, which has just been crushing it. It averages per month, right, 29%. Its average annual return, right, has been 348%. It's winning 86% of the trades, right? So talk about, an easy program to follow when the vast majority of trades you're going to get into are winning trades. Just makes it much easier to follow. The average winner, $642. The average loss is $590. That's a profit factor of 6.46. And the average number of days in the trade, about 9 days. So this is not scalping, but it's not, holding positions, for weeks upon end. You're in, you're out, you're banking profits, and like Ian talked about, managing the risk and locking in profits or gains as you go by taking out maybe half the contracts at a certain price level. Anything you want to add, Ian? Again, I should have said these results are from August of 2023 through June of 2025. Based on a $10,000 account size, and you're allocating approximately $1,000 to $1,200 per trade. And these numbers are non-compounded, which is the amazing thing. So think about, again, what would this do to your IRA? What would this do to your performance? Whether you're new to trading and you're trying to learn this, or maybe you're more experienced, but you just haven't had this kind of success. Not only do you get the trade alerts, but you're getting the education behind it, getting access to Ian and all that we'll talk about. Anything else you want to add to these numbers, Ian?
We've been having good success, and a lot of times the firms themselves are basically tipping us off to opportunity, because they're saying, they're letting us know through their transactions where the opportunities are.
And that's exactly right, like you saw with the dark pool data, and then using the technical indicators. So you're not just taking the dark pool data and jumping into a trade, you're doing some additional analysis, not only just fundamental, but the technicals that we talked about. Is it technically set up for, a good move in your direction? So this is just performed, it's just knocked it out of the park. Let's talk about the news event trade alerts. Okay, now this one you focus on the news flow, and you talked about the what do you call it, the death of news, how do you say it, how do you word it, Ian?
the anticipation, dissemination, and death of news.
There it is, right? Using the billionaire strategies. Talk about that a little bit, because I've heard you mention that before in some of the other, but folks may not be aware what you're talking about when you say the billionaire strategies.
Yeah, a lot of the billionaire or millionaire strategies that we like to use are really kind of interesting. You have Warren Buffett, who tells you to be greedy when others are fearful and fearful when others are greedy. Fits our mold perfectly with excessive fear and greed. You had Sir John Templeton, and you had Baron Rothschild, who traded during the Battle of Waterloo with Napoleon, for example. He also traded the excessive fear in the market, and I believe it was Baron Rothschild who invested in all the European stocks that were decimated, with many of them trading at about $1. And years later, he cashed out and with quite a good chunk of money.
Amazing, yeah, that was, like again, going back to the strategies that you utilize to take advantage of those technical pivot points, that herd mentality, right? The herd is typically wrong. Again, averaging about 4 to 6 monthly trades, that can depend on what's going on in the markets. And again, this is buying straight puts and calls, right? No spreads. And the performance here, this is averaging about 23% a month. The average annual return, 278%. Again, these results are from August of 2023 to June 2025. Again, based on a $10,000 account size, and you're allocating approximately $1,000 to $1,200 per trade, non-compounded, which is amazing. This one winning 74% of the trades. Again, very high win percentage, with the average winner of $742, the average loss $796, a profit factor of 2.67, right? If you know, those numbers are phenomenal. Average days in trade, this one's a little bit longer, about 17 days in a trade on average, with news event. All right, anything you want to add to what we've seen here for news event trader?
With news event trader as well, we also like to typically issue many more trades than the average there as well. Again, but with markets have been as volatile as they've been, it's made trading like riding a roller coaster. So we will have many more trades opportunities out there.
Michael asked a good question, and I'll throw it at you, because I don't think we quite touched on that. What percent stop loss do you use? So talk about how you manage the risk with these trades.
We try to use at least it's a mental stop loss of between 35 and 40%. But if we begin to see a particular trade start to pivot higher around that level, we may let it run just a little bit longer, just to see if it will pivot in the other direction. But typically, it's a mental stop loss of between 35-40%. We also like to use a mental trailing stop loss, especially on the second half of a trade, of at least 25-30%. That way, all of the risk isn't as high as isn't as high.
Right. All right. Excellent. So let's talk about the details of the program. In other words, what you get with these programs. You get access to Ian, right? Direct access to Ian and his team for any trading questions regarding the markets and the methodology. You get the direct trade alerts, right? That's sent to your email and or cell phone, right? And those alerts are very detailed, so you'll know exactly how to enter those trades, and then when to get out of those trades as well. Ian will alert you if you're going to take, half the profit at one point, or sell half the contracts to lock in some profit along the way. All that will be, you'll be alerted to. You get the education material on the methodology, describing the entry rules, the exit rules, and the money management rules that Ian just talked about. You get access to his monthly newsletter and weekly wrap-up sessions, which you've been doing a great job. You do some videos that are kind of like market updates, what's going on in the market, how your positions are being affected, and so on. Maybe talk just a little bit about those videos that you do for subscribers, Ian.
Usually they're weekly wrap videos for our programs, just to let you know or we opened and closed that particular week, what we're watching, what may impact stocks and options the week ahead, and we'll also take a look back at what happened that's still impacting the markets as well.
All right, awesome. And those are very, very valuable because they do keep you updated onto what's going on. So you're not left kind of hanging like, hey, what's going on? What is Ian doing? You'll know each week. So also you get access to third-party registered brokers. Right? This is an option for those of you who don't have the time, available to self-trade. There are third-party registered brokers. We are not affiliated with any broker. We don't recommend any particular broker over another. But there are brokers that have been trained to execute Ian's trades. They've been doing that for quite a long time. And you can get with them and they can set those trades, help you set those accounts up. And we can help you with that here at FFR. And you get access to us here at FFR Trading. Our goal is to build you a well-rounded portfolio of strategies and traders, non-correlated. So you might be in some of Ian's programs that are trading options, and you might diversify into commodities with our Turtles program and so on. All right, the partnership opportunity. We're only looking, or Ian is only looking for 10 new subscribers. Why? Because that's really all he can handle right now, and his team there. Also, they can't have so many people taking the exact same trade because it will show up on the big bank's radar and they'll trade against it as well. But what we're looking for, right, is someone who will provide us with their story. How did you find us? How did you find, Ian Cooper? Tell us about your background, how you were doing, how you got started. And then we want you to provide, as you get into the programs and you start trading, provide us with your monthly brokerage account statements and commit to a quarterly meeting at least, right? And that's, so you can get with our strategist. They can go through your accounts and make sure that you're on track to hit your goals, right? So everything that we do is client focused here at FFR. We're going to build you a portfolio of programs that fit your risk tolerance, that meet your needs and the goals, because everybody's different, right? Some of you are looking for income, some of you are just trying to build your retirement account because you got 10 or 15 years before you're going to retire and you've got 30,000 and you don't know how it's going to happen, right? With these kind of numbers you see that Ian's doing, it's doable. And I've seen clients here at FFR. I've had clients when I was on the strategist side of things that literally had no retirement, and then all of a sudden now they have a retirement. It's a beautiful thing to see. And then if you're happy, provide us with a testimonial of your success. We'll look at some testimonials because we got a lot of them for Ian's programs here. And of course, we always love that you refer us to your friends, family, and so on. Some of the recent Google client reviews, these are all for Ian. You can kind of go through. He says, Mark here says he's been following Ian's Algo AI recommendations since late November of 2024. So far, I've been profitable. The only reason I haven't given 5 stars as of now, I need to see how results will turn out over a longer period of time. Well, Mark, I don't know if Mark's on the call today, but I'm sure you're pretty pleased with the results since he submitted this review. Lisa says, I'm in an auto trade account with signals sent from FFR Trading, actually sent from Ian. I couldn't be happier with my experience with the signals generated by Ian Cooper's Algo AI research and with a personal representative, Robert Lanusa. It has been a terrific experience, and with a 1-month return of 27%, with only 10% of my total account being exposed in any given position. I'm ecstatic about the prospects for my future security that FFR gives me. So as some of these may be new to you, Ian, I don't know if you've seen some of these reviews as well. B Coop, this is one that was just came out a few days ago. FFR has been a blessing with the service I use. It has pushed me in the right direction with my trading. Right now, my portfolio is up about 20% with all within a couple of months. Thanks to Gabe for staying on top of it all and the monthly communications. Happy trading, right? And so on and so on. So some great stuff. It's got to feel good, Ian, that you've helping out so many people. Again, doesn't mean that there aren't losing trades, but you can see how Ian manages the risk, and then they get into some big winners that tend to run. So here's the opportunity, all right? And this is going to be for the first 10 callers. Again, as we talked about, we just can't open it up for everybody at this point. If you sign up for either program, so either the News Event Trader or Algo AI, Ian's going to allow you to test drive the other service for free, right? He's going to throw in $1,000 credit towards either program if you sign up for a 2-year term, right? And we've got the 2 free trades, right? So let's give them the 2 free trade alerts. And you can see the number to call, guys, if you want to get started to call. The 800-883-0524 number here. And if you're outside the US, you can use the 737-292-4425. You do have to call us. And the reason you have to call us and the reason we don't just sell these programs online is we need to talk to you. We have to make sure it's a good fit. Like I said, we are a due diligence firm, not only vetting the traders, but we need to vet you. We need to make sure that it's a good fit for you. We're not putting people in programs that are not well suited for them. Right, so we do need to speak to you and do our due diligence, and it's good for you as well to do your due diligence on that end. So if you call in, they're going to give you all the information on the program, all the performance details. They can show you brokerage, actual real client brokerage statements to see how clients are doing in these programs. Right, nothing is left undone. You'll have a complete, you'll be able to make a very informed decision. After the information that is shared with you if you call in. All right, so Ian, talk about these 2 free trade alerts you've got for folks. This is pretty exciting because I think this is the first time we've done this. But you got two that have been performing very well as of lately. It looks like you can continue to ride these horses until they stop giving.
Yes, yeah, both of them we've done very, very well with. But we, like you just said, we do expect to see both of them trend even higher. The first one is to buy to open the Palantir PLTR August 1st, 2025, 150 calls at market. This stock has been very explosive thanks to artificial intelligence. From its current price of about 149, I don't have a live chart in front of me, I apologize. We would like to see the stock rally to 160 over the next month. We're also recommending that you buy to open the AMD August 15th, 2025, 160 calls at market. This one did explode significantly higher today, but we do expect this one to push even higher, especially with the anticipation that we'll see even more analyst upgrades. AMD is becoming a significant threat to Nvidia, and because of that, we do expect to see AMD trading more within the territory of where Nvidia is and has been. So those are the 2 of the strongest opportunities that we have at the moment.
Fantastic. So guys, you can jot those down. Again, past performance is no guarantee of future performance, right? Trade at your own risk. But Ian's providing you, even if you just want to paper trade these, it's probably a good idea. So you can see, how these play out. But very gracious of you to provide those for those viewers here today, and thank you very much. So again, guys, you got to give us a call. That's the 800-883-0524 number here, or the 737-292-4425 number. You got to be one of the first 10 callers, all right, to take advantage of this. Sign up for either program, and Ian's going to allow you to test drive the other program for free. $1,000 credit he's offering towards either of the programs when you sign up for a 2-year subscription, and the 2 trades that he just gave you as a little bonus there. So make sure you give us a call. Ian, anything else that you want to add before we wrap up here today?
No, but I appreciate everyone attending today. I hope you learned a lot, and we're going to get back to making some good money in this crazy market.
So I just want to pass along, Scott said, Ian, I really look forward to those weekly videos, great info. Just a note, he said, I could never be as successful alone as I am with Ian. and that is based on real results.
I appreciate
He said it will more than pay for itself in a short time. So thank you very much, Scott. I'm sure you're pretty happy today, Scott, with the with some of the trades that were closed today as well. I don't know what program. I guess you're in Algo AI, but you may want to check out the news event. It might be a good opportunity to pick up one of Ian's other programs there as well, Scott. So thank you so much, Ian. Again, always great to have you. You give so much value. Really appreciate you giving those trade alerts out as well. We'll have to keep track of those. And again, when you join today, you're not just getting the alerts. Remember, you get the direct access to Ian. So any questions that you have, of course, you do get the alerts via email and text. We'll help you with the entry, the exit, the risk rules. You get the weekly wrap-ups that Ian was talking about. Those are videos and a monthly newsletter. And again, if you need it, we'll provide you access to the third-party brokers if you're not able to execute these trades on your own. All right, I think that's it. I'm just looking for any last questions here. Scott's in Algo AI. All right, perfect, Scott. That has, I think they're up over, well over 100% now for the year in Algo AI alone. So fantastic, fantastic numbers. All right, guys. So again, if you want to be one of the 10, you got to call us. Like I said, we do need to talk to you. We have to make sure it's a good fit for you. We don't want to just throw you in a program that is not suitable. All right, so give us a call, and Ian's going to give you a free trial of whatever other program and $1,000 credit to whichever program you buy on a 2-year term. And we look forward to working with you. So give one of our strategists a call. If you have to use the email, support@ffrtrading.com, and a strategist will get back to you as soon as possible. All right, but you want to be one of the 10, so using the phone is going to be as fast. If it's busy, just hang up, call again. All right, we've got a lot of staff ready to take your call. All right, again, Ian, thank you so much. Everybody there, out there, appreciate you your attending. Ian will be back again, I'm sure, but take advantage of this opportunity and get started right away. Start changing your trading, just like Scott did. Appreciate you coming in, Scott, and that was all unsolicited, by the way. So enjoy the rest of your trading week, folks. Give us a call and be one of the 10, and we'll get you off to a great start here. All right, take care, everybody.